let's start. Today I'm going to talk about fires, investor protection and insurance. And you see? Okay, that's our agenda, but we'll skip over that and that. Who are we? Well, forestry is sort of brand name for the team within Globe, which is an agency. So we insure things using Lloyd's and other markets. We've got 20, 30 years, possibly more, in looking at forests all over the world, as you see from that map there. And in those days, we did a lot of forest visits. So we were traveling from China to Indonesia to Latin America to have a look at the forest, see how they managed, collecting data, empirical data, that eventually we would use to provide a potential insurance solution. They didn't always buy it, but that's what we would do. At the same time, forestry, if you like, itself is an R&D operation. So we take part in research for eco-adaptation, for example, or the use of EO data. And in fact, tomorrow we're talking about EO data elsewhere in London and our journey and how it's helped us solve problems. And the next day we're talking about wildfires in Paris. Providing insurance globally. This is, I hope, fairly straightforward. We have a collection of A-rated insurers. So as an example, Lloyd's syndicates will be A+ rated, they're all rated the same, but it could be others like Swiss Re, Liberty in Paris and so on. But this year, really thanks to the work of Dan and our reinsurance brokers, we've got a miscellaneous collection of B-rated capacity who are very hungry to do business. They have the advantage that they probably have a slight low. Let me say that again. They probably have the advantage of being able to write business at a slightly cheaper rate than the A-rated because the capital requirements that they have. And so our job, if you like, is not just to design the insurance product, but to fit them with the capacity available that suits them. A quick headline, what are the most important perils in forestry? Well, it's right there. It's a landscape enterprise, right? So the only things that really affected on a major scale, and I'm talking about investors now rather than small family owners, would be fire and wind. And you've got some percentages there. Was it 63% is fire and 32%? That percent is wind and some also rounds. That's our experience as an insurer over perhaps 20 years after all our losses. Of course, it could be different for different portfolios and so on. The fire environment. I'll have a few slides talking about how things are going. We all know temperatures are warming. There's an article chart there that shows you it's 48 years since the last colder than average year globally. And my latest nugget of information that each 1 degree increase in atmospheric temperature increases the water in the air by 7%. That's an extraordinary statistic. And by way of example, in April, we had the big floods in Dubai in a desert environment. Of course, rising global air temperatures. One of the interesting things about this chart, not that it's going up, which is perhaps depressing, but is the impact of El Nino and La Nina, which back in the day was our equivalent to EO data. You know, we would scan data and El Nino years to see what correlation there was between damage and these ENSO cycles. But it's still important. I think last year it put temperatures up by 0.2 degree on top of everything else that was going on. And similarly, ocean temperatures, as we say there, oceans have been absorbing temperatures across the world for a long time, big buffer to atmospheric temperatures, and that is, or it sounds like it's coming to an end. So we possibly will have ever increasing temperatures in the atmosphere. And indeed, I read that Europe is increasing far faster than most of the rest of the world, partly because within that Europe geographic unit, we have the Arctic, which is, of course, increasing really fast because of the reducing sea ice and so on. And a final bit of gloomy news, if you like. If you're looking at temperatures, wind speed, and dryness, the prevalence of what I would call fire critical weather days is forecast over the next 50 years to double, quadruple, if there is an ignition on a day with a high temperature, high wind speed and low humidity, you have the conditions for a wild, well, I should say an extreme or extreme event. You have a conditions. Doesn't mean to say there will be one, because you always need ignition, and it depends on management on the ground. And that is work done by ARA in Paris some years ago. What's the impact? What's the pattern of all this, in our experience over 20 or 30 years, on the rate of fire loss? Now, I'm talking about fire, but actually in the back of your mind, think about wind, because they're all connected. Here's my favorite slide, and some of you who've seen my presentations before will recognize this, but it's a 40-year period of fire losses in Australia. It's split into 4 10-year periods, and the red figures along the top are those 10-year averages, the percentage of the area lost in that 10 years' time. And you can see the averages darting about all over the place. So lesson 1, forget averages, they're totally meaningless. It depends on the volatility. And then along the bottom, you've got the actual loss of the first 20 years, an average loss of 0.21% of the area forested in this case. But if you look at the second 20-year period, that's gone up 5 times. Now, you may think that's extraordinary, but we have seen that happen in Chile and Australia and other places too. So this, is it quintuple 5? This times 5, anyway, of the rate of loss is significantly in high-risk territories. All territories differ, of course, so take my words for the peak risk areas. And the other thing that I'm beginning to focus on a bit more for investors into forestry and nature-based solutions is the fact that wildfire and forest fire are certainly not the same thing. Forest fires in our context is managed forest, and therefore with precautions and plans and investments and so on. But this is the chart of the Australian wildfires up to 2019-20, and you can see the peak there. And from all the data that we've seen, and I can't guarantee it's correct, but it's industry news that I've come across, is that of the 24.3 million hectares, 1.96 was tree cover, and less than 1% was managed forest fire. So obviously that's a function of where it is and so on, but it's also a function of management. So fire is a manageable risk, and there are those, for example, if you go to invest in Asia, who will kind of guarantee they can stop any major fire in any managed plantation, given their ability, shall we say, to prescribe and invest in fire management and fire plans. Duration of fire. Yes, and brand new off the press, that one. 27% globally between 1979 and 2010 is the increase in the duration of the fire season, and 40% in the USA. Quite an extraordinary number, but not one to be feared, right? It's all about management. So we're giving you the big picture, but don't be disheartened. A few other examples of the trends. This is Portugal. You can see there they've separated the fire loss into scrub and forest, but you can see there is overall increase in major events, and perhaps so 2003 and 15 years apart. That seems to be a truism across many territories. Same thing in France. You've got the Mediterranean region here and the rest of France. And again, the peaks of loss in, 1990, 2003 and 2022. This is a very common pattern. 10 to 15 years between major extreme events. Now, these are portfolio numbers. And of course, if you're a small investor in a small forest, a small location, you could miss all this. Without that, there's no doubt. But if you're a major investor, this will happen, and it has happened recently. And finally, it's not all just about fire. It's about what higher temperatures does to our world. Typhoons and hurricanes are increasing in frequency, and it would suggest that they're increasing in severity as well. When extreme hot periods collapse, they can generate storms, typhoons, hailstorms. And there's just a map of Poland where 2017 they had their worst windstorm ever. A squall right up through the middle of the country. This type of squall has also been found in the Amazon, by the way, about 600 miles long it was, back in 2005 or before. And finally, you know, the temperature differential between the polar regions and the tropics is determining where our jet stream is, which is big news everywhere these days. And that has been responsible for the dryness in the US South and Southwest, and the current inclement, cold and rather rainy weather we're having here, because here the jet stream is more or less in the south of the UK at the moment, drawing in polar air. So it's a very interconnected world in terms of weather and risk. So what are the risk reduction strategies? I've listed 2 items here, and I'm not going to talk about the first one, simply because we don't have enough time, but obviously it's site selection and everything else. But Dan, sitting quietly and well-behaved on my right, is already and charged up to tell you about insurance. And what I would say about insurance, it's about insuring that loss that you cannot afford to lose. So we're not talking about itty-bitty losses from year to year. We're talking about something which is, as a major investor, could be 5 or 10 or 15% of your investment in a certain area. So that's what you should be looking at. One more slide before Dan gets on his feet. I came across this some years ago, also from Area in Paris. It's a stunning slide. It is the energy output of forest fires generally, and the fact that all our fire protection system, aircraft, chemicals, man, and so on, is only able to attack about 5% of all events, and the rest you simply take photos or take data or whatever. And the latest fire, 1920, in Australia, had a forest fire danger index well above anything on that column. I don't know what it is, but you can see the arrow pointing. Oh, you can't see the arrow, it's disappeared. Okay, there's an arrow going to the top of that picture on the right with the fire service to the top of the FFDI, what's it called? FFDI, yes, to show that it's had a much higher forest fire danger index. So let's hear a bit about insurance, and let's start with valuation. Mr. Longdon, your moment has come.
Thank you, Phil. So what do we insure? The insured interest is basically the standing timber. It can be based on a variety of different things. So net present values is probably the most standard we'd see. You can look at investment costs, carbon, value of tree crops such as walnuts or rubber. And then you'll see in the table on the right that we've got a table there which is based on a Pacific Northwest forest, where we can break it down by pre-merchantable or merchantable, various age ranges, various species, and so it's really up to you. So what products can we provide? So in timber insurance, there are 2 main types of insurance. There's indemnity, and then there's parametrics, which we'll touch on later. So indemnity insurance works much like your standard property or motor insurance policies, where a loss assessor will assess the damage site along with the forest manager and determine the damage. And the damage would be based on an agreed value per hectare, as you would have seen in the last slide. The loss is calculated by subtracting salvage and the excess or your deductible from the gross loss amount. We prefer to do this on a value at risk basis, and a value at risk basis is where you're only insuring the amount of timber that you think you would not be able to salvage after a loss event. So, for example, if you're based in US South, you may look and expect to receive 30% salvage after a hurricane. So you would only insure the 70% value that you don't think you would get back. By doing that, it speeds up the loss assessment, it keeps your values down, therefore you can have a much lower premium. We can also cover additional costs, and these could be things such as firefighting costs, debris removal, and other things like that.
That's fine.
Yeah.
Indemnity structure.
Yes, sorry.
Right.
Sorry, guys.
Sorry, we're having a little discussion. Right. The,
I've got that on there.
what we have here is a typical indemnity structure, which is just like your home, right? You have an excess, so you pay the first part of any loss, and then you may have a limit, how much you want to insure. In your home, that might be the full thing, but for a forest, it's only going to be a percentage. What I've done is to overlay those two lines over a ratio, so a loss history. So you can see that for example, excess for this investment, $500,000, $500,000, a lot of what we'd call attritional losses, and then possibly a 5 million limit. So insured for 5 million, no more. But what we've shown on that chart is you have the extreme event, which is much bigger than that. So the decision for you is what's the probability of that, which is the sort of thing we work out and provide to you. And do you want to cover it, or do you want to, run with it and take it on the chin should it happen?
Perfect. Sorry about that, guys. Moving on, so I mentioned earlier parametric products. So as Phil's already mentioned, there are some people in the room like Descartes who are experts in this subject, so please speak to them as well. It's quite new to the insurance market, particularly the forestry market, but it's gaining traction worldwide as it allows both insurers and clients to model their expected returns on the policy. In effect, it depends on two things, a trigger and a threshold. A trigger is the insured peril, so what needs to happen in order for the policy to pay out, and the threshold is the level of measurement at which the policy starts to pay out. So if we look at an example for fire, the trigger may be the fire event itself. It could be the amount of hectares required to burn before the payouts are made. That would be the threshold, and after the threshold is reached, a payout is triggered. Payment's quick and there's no physical loss required to receive the claim. So as long as there's been a fire on your land, it doesn't matter if the tree's burnt or not, there's a payout. For wind, the trigger could be wind speed within a certain proximity of your plantations. So for example, the threshold would be wind speed reaching category 3, where you'd expect a 22.5% payout of the limit that you've bought. Cat 3, you may get 30%, Cat 4, 40%, and Cat 5 maybe 70%. This comes from our own database of TMO losses in the US South since 2000, looking at hurricanes such as Hurricane Michael and Hurricane Laura. Now, we've talked about indemnity and we talked about parametrics, but just to confuse you even further, we're going to talk about a hybrid of both of the two, which is our burn scar product. We've been writing this product for probably around 5 to 6 years now. And so it's called burn scar. What it does, like I mentioned in the previous parametric, it uses satellite data to accurately map and classify fire losses. In the top image, you will see, hang on, sorry, I need to go to the next slide, I think. Yeah, in the top image, you'll see a blue outline being the insured's plantations. And on the left side, you will see a burn scar image where the fire is coming across. This is generated using the normalized burn ratio, which is used by the US Department of Forestry, and this classifies the damage into 3 different severity levels, 4, sorry. One being none, low severity, which is a 30% payout of the limit, medium and high severity are both 100%. So, as we've already seen, there are these traditional indemnity covers, and it's the smaller policies where you have a much lower deductible or excess and a small limit, they tend to end up being more of a dollar swap per se. We look at examples of clients in Thailand with rubber plantations where they had a small deductible and they were having numerous claims every year, and all this did was push the premium up and meant it got too expensive for them. So really what we think the best thing to do now, especially for the larger owners in the room, if you're looking to protect your asset, you need to decide amongst yourselves how much risk you're willing to take. Are you okay with losing 100 hectares a year? Do you take into account in your models that you might lose, a couple of basis points a year, whatever it may be? We think that actually the best thing to do for the bigger clients is to have a much higher self-insured retention or excess, so you are only covering for the extreme events. These extreme events could be a hurricane, it could be a massive fire, the things that you cannot physically afford to lose. And by doing that, so we're developing a cat-only policy, which we've had some success with people in the US. So we're just trying to protect you from that. And by doing that, you're getting a reduced premium compared to insuring the sort of your first 5 million is, believe it or not, more likely going to be more expensive than the 20 million after in terms of premium. That's it from me, Phil.
Oh, right. So I wasn't asleep, Dan. I was following you. Very good. Okay, so only 2 slides left, and then it's lunch. So breathe in. What information do we use? It's got a lot easier, actually, with the use of EO data that now pervades our rating and analysis of risk. So it's good to know what's happened on your forest over time, a good old empirical loss record with dates and areas lost. These days we do use boundary files for every location, so that's a KMZ or KML file, which we then check, and the area within that should be the area of your scheduled forestry. Of course, your portfolio might have 125 of these KMZ, doesn't matter. It's all managed within the risk analysis protocols, if you like, that we now use. A little footnote, might be worth saying that since our transition from empirical data for risk pricing in 2019, our analysis for a major portfolio has reduced from days down to, shall we say, 20, 30 minutes. It's quite extraordinary what is possible with a bit of coding. So thank you, Ming, for that. That's really revolutionized our business. It also enables us to do risk profiling for any one of your investments. We can gather and have a look and give you our impression of what the risk is, what the frequency is, give you a frequency times severity profile, and talk about other issues that might impact on your purchase of that site or other management aspects. And yeah, fire plans. I won't go into that now. They're long but essential, and that increasingly is an aspect in our final price to the reinsurers. Somebody might have twanged a bell. And finally, the schedule. So every KMZ has a schedule of forest within that, and the boundary should more or less match the area in your schedule, which is the written list of every tree, age, compartment, and so on. And that is the summary. So what do we say? Insurance is available. It's a global market. So when we say it's available, it's not just London, right? It's all over the world, more or less. A couple of countries provide us with issues at the moment, like AA rated in Chile. Is that correct? Of course, we steer clear of Russia at the moment. But otherwise, it's a worldwide availability of insurance to meet the needs of investors and others. Indemnity policies, we've talked about that. Parametrics, increasing popularity. Lots to be said for that. We just need to ensure that the forest owners, investors understand how it works. They can relate it to their business. And as Dan and I have said many times, only insure what you can't afford. And with that, lunchtime. We have, what's the time? We have
2 minutes.
2 minutes. Any questions? One on the back. Fantastic.
Thank you so much for. Okay, first, Ariane Keplun from AXA Climate. So there is a fifth insurance.
Oh, I missed you off. I'm sorry. Yes, it was on my own. Pressure. That was pressure.
Thanks so much for explaining what insurance is, because there is a clear lack of understanding of how these products are functioning today. And my question is, how do you see insurance to be actually used as a lever to promote sustainable forestry practices? Because you mentioned two very important parameters into wildfire propagation. First, you say ignition risk, indeed, climate pressure, of course. And there's a third parameter, which is vegetation or forestry covers. That depending on how the cover is structured, composed, the type of species, etc., the fire spread can vary very significantly. And with this vegetation question goes the management practices also. And there is possibility to model some of the sustainable practice in forest management and to be integrated into insurance modeling. So what's your reflection on that, and how, question is, do you see insurance as a potential lever to promote sustainable forestry practices?
Well, when I dream, I think about insurance as a kite mark. In other words, we are pretty rigorous about what we look at. We have lots to improve on, but we're getting better all the time as more data becomes available. So, I think it's a very useful tool for project promoters to attract investors, if they've perhaps come to us or others in the room, including yourselves, to get an insurance, shall we say, offer in principle, a bit like a mortgage in principle. I think that's very useful. In terms of how insurance responds to these other things, I mean, eco-adaptation is a big thing. And, we have no metric, if you like, to give a discount for eco-adaptation or other, or the fire plan quality or whatever else is going on. But that's a work in progress. So we're working on that right now in another sort of project outside of the day job. So we hope to enable that to contribute to the investment field. Have I answered your question sufficiently? Or you stopped listening halfway through? You're just getting hungry. Right, but that's my vision. I mean, let's face the fact, 97% of all forest owners don't insure. Why? Because mostly they don't know about it. B, it's the circuitous route to access the insurance market, mainly based in Europe. Therefore, we have to, what you say, we have to appeal to the institutional investors to understand that while they would insure any other project, building a railway or something, it is available for this as well. And there are people here with decades of experience in risk in agriculture and forestry.